Good morning, traders of the Bookmap community. Welcome so much to the live stream. My name is Charles. I come from a community called Piratetraders. We are ES and NQ traders that are focusing on intraday moves based on the auction process. What does that basically mean? It means we're looking for opportunities where one set of participants is running out of steam and the next set of participants is stepping in to take charge. So very simply, is the market going to go up or is it going to go down? Right? That's what we're trying to figure out all day, every day. And then we take trades when we see profitable opportunities within that understanding. If you are joining me from the Bookmap Discord, you can head on up to the tab that says Futures Charles, and you can leave your comments there and I will respond. If you're here on the YouTube, first and foremost, let's smash that like button. Likes go a long way with the YouTube algorithm. We got 21 people hanging out right now and only 3 thumbs up. So if we can get to like 20 thumbs up, we'll probably have 40 people hanging out. If we can convince them to get us to like 30 thumbs up, we'll have 80 and so on and so forth. So if you have not yet, please smash that thumbs up. I sure would appreciate it. All right. Well, let's talk about the market. The market has been a little bit crazy as of late. And so I thought it would be a good time to zoom out and give ourselves some perspective on the market. Now, first things first, last week was a contract rollover. Many debates are had every time we have a contract rollover about what is the best way to handle it. How do you look at it? What chart should you be looking at? But very simply, I use a continuous chart of the ES. Okay, so that means they just take each new contract and roll into that new contract, but they keep them all smushed together. And the reason I do that is because it gives me all the volume data, the previous volume data. Whereas if you're just looking at one contract, it literally, this contract just started last week, so there's no data from before that. So the thing about continuous contracts is sometimes, for that week that you're doing the rollover, it can be a little tricky to read. Well, that week is over. So now I will say very simplistically, the levels you see on the chart ahead of me are the levels I'm talking about. There's no reason to have confusion. If we are pulling back to a level from a previous contract, I'm using whatever the level was, numbers wise, at that previous contract. Okay. So we don't have to get overly complicated. Looking at the market in that context. Okay. We basically want to ignore the little tiny gap up near the high because that was the contract rollover. And we basically just want to say to ourselves, bigger picture, what is happening to the market here? Okay. So we're going to zoom all the way out to a monthly chart. We're going to start with the monthly, where we will get the slowest changes in market behavior. Now, if we look at the monthly chart, you can see we have been in a channel on the monthly moving to the upside. We have had momentum on a monthly time frame, basically for the last 1, 2, 3, 4 months straight. Okay. As far as that momentum is concerned, we still have it. Now, this might be the shape of this candle is what we call a spinning top. This might be the first, month for what could in the months ahead be a pullback. But so far, right now, at this moment, all it is telling us is that we still have momentum. We still made a higher high and we still held a higher low on the monthly time frame. So on a monthly time frame, we still have momentum. Let's see when we look at the weekly. All right, well, now the weekly is where it starts to get a lot more clear because clearly we do not have momentum on the weekly. We had another spinning top on the weekly last week, which is a sign of balance, right? They tried to take the market higher, they tried to take the market lower, and they came right back to the middle of the range. Okay, so that's balance happening, at the all-time high. But also on a weekly basis, we have 3 red candles. And so obviously this only includes today, but this week's candle, but we have 3 red candles. So that is a sign of momentum down. Okay. It is worth noting that momentum on a weekly time frame doesn't generally last that long. Here you can see 3 weeks down. Here you can see 4 weeks down, and the 4th was a reversal. 1 week down, 2 weeks down. You see what I'm saying? So we don't generally tend to have, we're in a bull market right now. We don't generally tend to have, long extended multiple weeks to the downside. Okay. So right now, as of this moment, there's really no information from the weekly as long as we are inside last week's candle. If we get a lower low on a weekly, then we know we're getting that larger pullback. Okay. So now let's zoom in and we'll take a look at the daily. I'll be honest, the weekly and the monthly were not that helpful. So we're back in the daily and same thing, right? I can make two arguments here. I can make the argument that we got new all-time highs and now we're getting a pullback in price. I could also say we are just balancing over a very long time frame. Today's market will tell us which of those two is happening. Are we just balancing or are we on a mission to get much lower prices to the downside? How will we know? Let's zoom in and look at the market profile chart where we will be able to get much more fine-tuned answers to our questions. Okay. So looking at Friday's range, what happened Friday? Friday was what we call a reversal day. When the market opened, the momentum was to the downside. We had multiple days of the market heading lower. We had a gap down. We had all the reason in the world for the market to continue to the downside. It even had weak references right below the opening price that needed to be repaired. Well, we did not repair any of those weak references, which is a first sign we don't have momentum down. We filled the gap and did not get any resistance at all when we filled the gap. Another sign that we don't have momentum down. We then began one time framing higher, a sign that we don't have momentum down. And we ended up pushing all the way up above the previous day's high and then basically spending the rest of the day up there, right? We spent the rest of the day bouncing around above the previous day's high. That is a sign of momentum up. Okay. So we got signal after signal after signal that the momentum down was over. And then we started to get signals that the momentum up is going to hold. Okay. So now this morning, what am I looking at? What is the thing that is going to tell me, do we still have momentum up or was this just a bounce and the market's about to get slapped right back down, what they call a dead cat bounce? Which is it going to be? Well, the levels that we left behind on Friday will be the truth teller. So we have 3 sets of single prints that we left behind in here. It is not normal to leave behind 3 sets of single prints. Okay. Not on the ES. NQ, sure, all the time, but not on the ES. Okay. So that is a sign of a lot of momentum up. So the first order of business in my mind this morning is, can this market come back and backfill these single prints, right? Can we get back to the first set, the base of the first set of single prints at 59.84? That's not bearish to me if we came back to that first set of single prints. But what I'd be looking for is for the market to bounce, which it did in the overnight, right? For the market to find support there and turn around and start heading back up. If it does that, it's bullish. Okay, no question about it. If we backfill the first set of single prints, find support, and we start turning around and heading higher, this market is bullish. End of conversation. Okay? Now, if we get to the first set of single prints and we don't bounce there, then that increases the odds significantly that we need to pull back to the second set of single prints. So we're not bearish yet, but we are certainly not bullish. If we cannot find support at that first set, if we cannot find support at 84, it tells us we need to go to 62. Once we get to 62, this to me is a very important area. It was the volume and time pointed control on Thursday of last week. So again, if there's a pivot point where buyers should step in today, if they want to keep the momentum going to the upside, it is absolutely right there around 62. So 59.62 is a very important level to me today. If we get down there and we get a bounce, I'm bullish. If we get down there and we don't get a bounce, not only am I bearish for the market to pull back down to the next set of single prints, 59.33, but I'm bearish bigger picture. Okay? Because if I'm zooming out and I'm looking at the daily and I'm asking myself, what is the market going to do? Is it going to keep going lower? Was this just a dead cat bounce and now we're going to get more momentum to the downside? Or was that a bounce that's going to V-shape us back to all-time highs? AKA, is this a larger pullback in price or are we balancing? Right? If I'm trying to figure out which of those two is happening today, that second set of single prints at 59.62, that's where we'll find out. Buyers stepping in there is bullish. Buyers not stepping in there is bearish, because it makes this a dead cat bounce, and it means we need to pull back down towards the lows. Okay? So again, as always, I would watch for support at 33. I'm not saying it's impossible that the market can't come down to 33 and then reverse and come back up out. I'm just saying, in my mind, that is an almost near impossible thing. Not impossible, but I would give it less than 5% probability that the market would do that. If this market wants to make higher highs today, if it wants to get above 60.51, it should find support around 60, 59.60. Okay? Because if it can't find support there, it needs that bigger pullback. So that is the most important level. That is what I'm watching. As far as my mood, am I more bullish? Am I more bearish? What do I think is going to happen? I'm leaning more bullish slightly, but I do think we need to pull back and test these levels. So I think we most certainly need to test 84. And if that doesn't hold, 62. So I can be bullish even if we're going down, just to go down and test those levels. But if they fail, I got to change my mind quick, because this was not a bounce. It was just a rip for the sellers to step in and sell. Okay. Any questions on any of that from the chat? Jason says no email this morning. That's strange. The email went out. Jason, shoot me an email directly to ahoy@piratetraders.io so I can know your email address, and I'll try to figure out what happened, because I did double check and the email did go out today. So I'm not sure what happened there. Bill K, good morning to you. Jay is here. I don't even know how to say this. Fazule, welcome to you. Will in the house. Scalping Strategy is here. Good morning. Good morning. Any questions on any of that? So we're very neutral today. The market could go up or down or nowhere. Could go sideways inside yesterday's range all day. And we are watching the base of the single prints from the last 2 days to find those key levels. I also wanted to make note of one final thing. Let me zoom out here. So on Friday of last week, the market left behind something that is incredibly rare. I was talking about it live as it was happening. This is probably the third time ever I've seen this happen. The market left behind low volume nodes. Let me just update my data here. So you will see inside this range between 59.60 and 59.64, the market left behind multiple nodes with less than 200 contracts inside of them. Anytime you see a market leave behind, that low volume, the market needs to come back and retest that level. Okay. The fact that, sorry, because it's in white, you can't really see it. So we can see at 59.62, let me just change this. At 59.62, we only had 51 contracts that changed hands. That is insanely rare to see. That the market popped through this level so quickly, so fast, that literally only 50 contracts were able to change hands there. And it's not like there weren't contracts that would be, who was the sellers? Who were the 50 sellers there? There was 9,000 sellers up here, but only 50 here? What's the deal? You know what I'm saying? So that is just very, very unusual to see that you would have this low volume. That is another reason in my mind that if the market came back to the base of those single prints, that it wouldn't necessarily be bearish. The market could come back there just to test it. So I'll be looking for a bounce right there. If the market comes back for it today. Let's take a quick look at the NQ. I think it's pretty much in exactly the same scenario as the ES. both are either balancing or they are selling off, right? So we are either going sideways at higher prices in order to turn around and continue higher, or this is just a dead cat bounce to continue lower. So I'll be treating the NQ exactly the same as the ES today, looking at those important levels from yesterday as signposts to tell me what to expect today, right? So again, same thing. We got two sets of single prints. The first base of the single prints is 21,465. The next set of single prints is 21,315. So it's the same story as the ES. Getting back to the first set of single prints is not bearish, right? That's just the market dipping real quick to bring in buyers. If we get a bounce there, I'm bullish. If not, if we don't get a bounce there, then we need to pull back to the second set of single prints, and that would be bearish to me. The fact that we need to means we probably are heading lower. Okay? But either way, we'll look for support there just in case. If you're looking to simplify your view of the NQ, you could also just use the overnight range. So you've got a pretty strong high on the overnight range. You got a 45-degree angle up there. So it's probably going to take quite a bit of poking to get through that overnight high. And the overnight low you could use as 21,518. So you could say inside of there, you're not going to mess with it. You'll let it just chop and chop and chop and chop and chop. But support above that overnight high would be very bullish, and resistance below bearish. Can't quite do the same thing with the ES because it's such a large range. So we will use the single prints. Hey, we'll use the single prints. "10 minutes till market open. Let me know, what are your questions? Are you lost? Do you have no clue? Feel free to ask in the chat. We got a question here. What about the base of the spike on FOMC? He said spine on FOMC, but I assume you mean spike. So nothing in the FOMC matters anymore. It's about yesterday's range. It's about Friday's range. So this was the first liquidation of the market. Okay. So the market went lower. At this point, we don't know. Maybe the market wants to turn around and head higher. Maybe that dip brought in good, strong hand buyers, and now the market's going to go make new all-time highs. We don't know, right? But then what happens the next day? The market goes nowhere. It just grinds right in the lower end of that range, and it even makes a lower low. So that is the market telling us, actually, it has momentum down, right? That the selling isn't over. It needs to go lower. So we open lower the next day. We're thinking, yep, that's what we expect. We expect the market to keep going lower. But what does it do? It slingshots and turns around right back up. So now I don't really care about FOMC day anymore. What I care about is this slingshot moment that we got on Friday. Was that just a fake out? What we call a dead cat bounce, right? Was that just to convince everyone to go long on Friday up at the highs so that today we can wipe them all out coming back down? Or was that real buyers? Was that the dip buying? And the market's going to keep going higher. That's what I'm asking myself this morning. Which of those two scenarios is playing out? And if those are the two scenarios, it doesn't really matter Friday's range right now, because I'm more focused on, can we even get to Wednesday's range? Doesn't matter to me right now. I'm just curious if we can get to Friday's high. Once we get there, I'm very bullish. Yes, the single prints from the FOMC day are targets to the upside to backfill, but we got miles to go before we're even thinking it's possible, because we got chopped this morning. So we're going to wait for that chop to play out. We're going to see how we handle the base of these single prints from Friday's range. That will tell us. I will tell you, if the market comes down to 84 and it finds support there and it turns around and it heads higher, The first target in my mind to the upside is this node right here of resistance. The second target is the overnight high. The third target is the previous day's high. If it keeps blowing through all of those, then the next target becomes the single prints from the FOMC day. So like I say, we got a while to go before we're thinking about it, but it is in play. We absolutely could get in there if we hold the support. Once that opening bell rings in 9 minutes. Griff says it was a quad witching on Friday, which was weird trading. Do you take that into account at all? So the answer is yes and no, right? I talked about this on Friday with people that are in the brigade. Normally on a heavy options expiry day, the market kind of goes nowhere. Normally it's a tight range bound, just balancing day, much like we had on Thursday. So to me, what we got on Friday was unusual specifically because of all the options that were expiring. It was particularly unusual. And so when the market is doing something weird, you can't give it context, right? This is something that I talk about in my workshop, Mastery of Markets and Minds. If you want to be a professional day trader, if you want to trade the market every day, what you're looking for is what we would consider like normal market behavior, right? There are just some days where the market makes sense. What it's doing is what it normally does, and it makes sense. And, you're looking to make your money on those days, right? Because you have a system that works for those days. When there's a random anomaly and something crazy is happening with the markets, those are actually days where a professional trader is stepping back and being like, okay, I'm in unknown territory right now. I'm not a genius. I can't always predict every single thing the market is going to do. I have to admit to myself, I don't really know what the market is doing. That's where I was Friday. By probably the D period, I was like, holy shit, this is just like, I don't understand what this market is doing. This feels very unusual to me. Let me take a step back. And so it's funny because I find amateur traders, they want to make a ton of money on days like these. They think like, I should make a killing on days like these. For me, it's exactly the opposite. Days like these are days where I step back, I protect my capital, I'm cautious. I made a lot of money on both these days, but not by like sitting in a trade the whole move, but by taking scalps along the way. But really I make my money on these days. Right? Really, I make my money on days where the market is behaving in a normal sort of way. And the trick for me is when we get to one of these days where the market is doing something crazy and random, is I don't let myself care about it. I don't care why it's happening. I don't care what's happening. I don't care if I'm confused. The only question I'm asking myself is, do I understand what the market is doing right now? If yes, I take trades. If no, I don't. And so days like Friday, which was a very rare anomaly to see, I don't question it. I'm not trying to come up with an explanation. I don't need to guess what comes next. None of it. I just deal with it how I do in that moment on that day. And then the next day, which is today, I take that information into account. So as I've said, to me, I'm neutral, slightly more bullish, but I just need to see what happens at the base of those single prints. That's all. Specifically the one around 59.60. And then I'll have clarity. That'll be where I can finally understand what's going on. But in between here and there, I'm just patiently waiting. So yeah, I highly recommend that you learn to recognize what is normal market behavior and what is anomalies, and don't worry about the anomalies. Don't obsess over them. Don't try to explain it from a logical standpoint. Just don't exercise your brain in that way. Just let it go. That's not your day to trade. Or that's your day to take quick scalping trades here and there and not, over obsess about understanding every little thing the market does. Because make no mistake, the market is random. anyone that wants you to think that there's like a boardroom somewhere where people are secretly manipulating the market and they know everything it's going to do and they're just out to trick you and take your money. Bullshit. Everyone is guessing. It is random. Every day, anything can happen and everyone is just guessing. So you just have to learn, what are your markets where you understand what it's doing and what are the markets where you don't, and just only participate in the ones where you do. You can make tons of money that way. BC says, I'm new here. What do you mean by single prints? Okay, so we're talking about the market profile chart. I got two charts up on screen right now. The chart on the left side of the screen is a market profile chart. The chart on the right side of the screen is a Bookmap order flow chart. So on the right side of the screen, it is showing us where there's liquidity in the market, right? Where there are orders that are waiting to change hands. And then how does it change over time? You know, if there's a bunch of orders down here, what happens when price gets close to it? All right, what happens when price starts to run away from it? What happens to those orders, right? The market profile is showing us price action. So where, like literally what price levels does the market go to? And then how much time and how much volume does it bring in there? So what I'm talking about with single prints is, if you look at Friday's range, you see how there's only a letter D here. There's no other letters. Everywhere else, there's multiple letters. But right there where that D is, there's just only those single letters. That's what we call a single print. And it basically means the market didn't get to spend a lot of time in there. And if the market didn't get to spend a lot of time in there, guess what there probably is? Traders who want to do business. There's someone somewhere who has their stop, you know, right here at 84. There's somebody who has a limit long right there at 84. There's somebody waiting to do business there. And all the market is doing each day is figuring out where it has to go price-wise to do business, to get contracts to change hands. Wherever the most contracts will change hands, that's where the market goes. So seeing that we have these single prints here tells us there's a pretty good chance the market's going to come down to see if anybody wants to do business there. But where it gets interesting is not necessarily in predicting that it'll come to the base of the single prints, but observing what happens when it gets there. Because if it comes down there, it gets the base of those single prints, and then it brings in buyers, guess what that's telling us? We don't need to go any lower. We have buyers. So now we have to go up to look for business, right? We found business down here. We did all the business there was to do. Now we got to take the market higher and look for sellers at a higher price. And so that would be very bullish to see if we found support there. In the same regard, if it gets to there and we don't get business, whoops, come on. Okay. So if the market opens and it gets down to the base of those single prints and we don't bounce, we just keep selling and selling and selling, well, then that tells us this wasn't a big enough move down to bring in the business, to bring in buyers. What's the next level? Bada boom. So then getting the probabilities of a trade from here to here are very, very high. And we play the same game at the next set of single prints. Does it act as support? If so, we're bullish. If not, we're looking to backfill the next set. Okay, so there's no guarantee we get to the base of the single prints, but if we do, what happens there is incredibly valuable information to carry forward throughout the day. All right, the market is open. I see it as a chop zone. I'm looking for resistance at 60.15, 60.21. I know this is a lot of levels. 60.33. Okay. So I'm basically looking for the market to get smacked down in here and then come down to the base of these singles where I will look for support. And remember, the most important thing, the most important piece of context that we are trying to understand today is, what was Friday? Was Friday just a dead cat bounce and the selling is going to continue today? Or was Friday the reversal and the momentum is going to continue today? That is our focus. Until we can answer that question, there's no reason to force trades. Forcing trades is gambling. I'm not doing great with drawing my arrows this morning, am I? There we go. Boom. So Sandeep says, now that we don't know which way it might go, how does the bubble maps help here? So I think with the bubble maps, what you're talking about are volume bubbles on the Bookmap chart. I'm not, I don't use volume bubbles that much. I just like them to pop out when it's a very big imbalance. Essentially, what those are showing you is, are there more buyers or sellers? So when you're asking the question, like, how can they help us? Well, what kind of trader are you? You know what I mean? Are you a scalper? Are you looking to trade during the initial balance? Are you going to trade right now inside the chop zone? Like, what's your approach to trading? If you're a scalper who's literally just trading for like 2-point, 3-point, 4-point moves, and you like to take trades within the first 30 minutes of the day, well, then those volume dots would be very, very helpful right now, because they'd be telling you, is a majority of the participants going long or going short at this second, right now, at this moment. You can zoom way in. Let me just put my settings back to normal. I'll restore it to default so you guys can see. Right? So if you're looking at volume dots right now, you're seeing green, 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 green. You're thinking long, 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 long. You're seeing red, you're thinking short. Now you're seeing green, you're thinking long. Now you're seeing red, you're thinking short. That's great if you're a scalper that's making decisions in a fraction of a second, but that's not how I trade, right? I'm not trading that way. So that's not really a helpful tool to me. That's why I only really want to see the big imbalances when there's way more buyers than sellers at a particular level. That's the only time I really care, because I'm focused more on a bigger picture, right? You can see I've drawn levels on my chart. These are levels where I could go short. These are levels where I could go long. Neither of these have limit orders sitting at them right now. Okay. Don't misunderstand. I need to first see support or resistance to trust being willing to buy or sell it. But in between those two, there's nothing for me to do. And if you think that's crazy, if you're like, Charles, I can't imagine the market making a 40-point move and me doing nothing, well, then you and I are just different types of traders. You know what I mean? I don't care about the market making a 40-point move and me just watching. I only want to enter trades when I'm sure I understand what the market is doing. And I guarantee you, at some point today, I will. I guarantee you, at some point today, the market will do something. Maybe it'll find support at 59.84 and I'll know to go long. Maybe it'll look above and fail the overnight high and I'll know to go short. I don't know yet what it'll be, but at some point today, something will happen that will give me a high probability opportunity where I can take on very little risk, and then I'll get in my trade and then I'll make my money. And if I have to wait 3 hours for it or 3 minutes, doesn't matter to me. I just need to be at that understanding that I know what the market is doing. So all the tools that I will talk about today, whether it is market profile or it is Bookmap or it is the market internals, right? Whichever one I'm talking about, it is purely to give context to this bigger question in my mind, which is, was Friday a dead cat bounce or was it a reversal? And once I have the answer to that question, then come the money, right? Then come the opportunities. So let's just wait and see. Good morning to Nap. Welcome. He says, I'm talking about the Bookmap heat map. Yeah, so the heat map and the volume dots are different things. The way the heat map works is it's showing you the live orders in the order books. So I don't really obsess too much about the orders that are currently in the order books right this minute. What I am more interested in is how are they changing over time? When do they change? And what happens next? So for example, if we look at this right here, there was this huge order at 9:30 a.m. when the market opened, sitting down here at 59.80. The market started to make a move up and that disappeared. So boom, that catches my attention, right? Same thing right now, it's happening. You see how they're layering in orders up here at 60.12? Well, why are they doing that? The market just started to reverse down. Boop. Well, there they disappeared them before I could even finish explaining, which means the market's going to turn around and start coming back up. So the changes in order flow tell me when there are changes in the market. Now, the change in the market might be a change in tempo. Maybe we've been grinding and going nowhere. And all of a sudden, I start to see stuff change in the order book, right? I start to see them pull orders very quickly. And then I go, okay, tempo's about to pick up. Tempo's about to change. I want to get in my trade. I want to be in it because the move's about to happen. Or vice versa. If the market is moving really quick and then all of a sudden I start to see changes in liquidity, well, then I know, okay, things are probably going to slow down now. You know, also you can start to recognize patterns, right? Like on Friday, it was just beautiful in the order flow, watching how the market worked. It would put in a bunch of liquidity above, and then it would come up through it, and then it would put in a bunch above, come down a little bit, come through it, put in a bunch above, and literally as long as it kept doing that, the market kept going higher. And literally in the F period up here at the high, I noticed they weren't doing it anymore. They weren't piling the liquidity up any higher. And so I didn't know for sure, like I could, like I had a crystal ball, but I was relatively certain in the F period, we'd made the high of the day. Right? Well, that's powerful information for me to use the rest of the day, to not be trying to chase price to the upside at the high. So changes in order flow is incredibly powerful to recognize in real time because whatever's happening in the market is about to change. If it's going slow, it's about to go fast. If it's going up, it's about to go down or sideways. So that's what I'm looking for. I'm looking for changes in order flow to recognize when something is changing in the market. So this is an example. I know this seems like woo-woo to you guys, but they start to pile in this liquidity right here. Let me change the color. They start to pile in this liquidity right here. Okay. How does price react? Down, 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 down. They pull that liquidity. They disappear it right here. What does the market do? Turns around and starts coming back up. Right? Same thing with right here. Very little liquidity below price. All of a sudden, they start to pile it in. What do? They push market away. That is one of those common things. Often large nodes of liquidity actually push the market the other direction. You might think, oh, this big node's a magnet. No. The magnet is actually pushing it away. Oh, this big node's a magnet. No. The magnet is actually pushing it away. So when you see these things pop up, depending on what's price doing, you can say, is this going to pull it towards it or push it away? So I'm going to go ahead and label this a weak high. My reason for labeling it a weak high is that the taper at the high is absolutely terrible. So it does seem like the market needs a pullback. It seems like the market needs to dip a little bit here to bring in more buyers. But I do think they want to come back for that high at 6,008 at some point because there's just terrible taper there. Reaper says, looking at your chart, it seems like you would take a trade and stop based off of structure. So I'm assuming you have a decent sized account. What account size do you recommend to trade one mini? That's a great question. So I have very specific rules about entering trades and the amount of risk. So every trade, the risk is capped, is limited to 2% of your account size. Okay. So depending on what your account size is, that decides how much risk you can take in each trade. And that decides what position size you should take. So let's say, for example, and again, do not take this trade. I'm just throwing out an example. Let's say right now at this moment, I wanted to go long, right? And I wanted to put my entry right here at the opening price. And I wanted to put my stop down here below the base of these singles up because I think those singles are going to act as support and the market's going to reverse. Okay. So that is taking on from, 5,999 to 5,979. That's a 20-point move, right? So I'm risking 20 points. So then I'm saying to myself, okay, I want to get in this trade, but I have to risk 20 points to get into it. What position size should I use? Well, that's when I look at how much my account is. And I would have to do the math to get really specific. But let's say I have $20,000 worth of capital that I'm trading with. I could probably, with $20,000 worth of capital, I could take this trade right now with one MES contract. Because if I were to get stopped out on a 20-point move with one MES contract, it would be less than 2% of 20,000, right? So it's, $5 a point, 20 points. Yeah, it's $100. So that's less than 2%. 2% of 20,000 is 200. So yeah, I could take this trade right now with one MES contract if I had a 20,000 account, right? Or let's say I didn't. Let's say I had a $10,000 account. Well, then I just can't take the trade, right? Because then I would have to lose more than 2% of my account to be able to take the trade. So I can't take it. All right. So that's the first concept. That is the concept of position sizing. I basically use 2% of my account and however many points I have to take for the setup I want to trade as my way of choosing my position sizing. But then we start talking about entries for a trade and probabilities of success and minimizing risk. So then I might say to myself, okay, yes, I could get in right now at the opening price and have a 20-point stop, or I could put my entry down here at the base of the single prints. I could put my entry at 84 and use like a 4 or 5-point stop instead, right? Well, now I'm taking on much less risk. I'm only risking 4 or 5 points as opposed to risking 20 points. That's great. So guess what I can do? I can trade with bigger size. So now instead of getting in with one MES contract, I'm getting in with 4, right? But also that trade has a better probability of success because I got this terrible taper on the high. I'm pretty sure the market wants to come back for this high at some point today. I know that this is good support. A base of single prints is often support. So the odds of a trade working going long down here are much better than going long up here, right? So now I've got less risk and a higher probability of the trade working. That's what I look for as a trader. That is what I'm always asking myself is, what is the minimum possible risk I can take with the highest statistical probability of the trade working? If I limit myself to only trading when I have both those things in my favor, a high probability that the trade will work and a small amount of risk to get into the trade, I can be a profitable trader. Because when those trades work, I make more money, right? If I got long, my target is coming back through, let's say my target is coming back through, the high, right? If I get long at the opening price, risking 20 points, my reward is only like 10 points, right? So I would have to be right like 80, 90% of the time if I'm taking trades like that to be profitable. Whereas if I got in it down at the base of the single prints with just a little bit of risk and I got that move, well, now I'm only risking, 4 or 5 points to suddenly make 25 points. And you don't have to be right that much. You can be right one time, you make your 25 points. You can be wrong the next 3 or 4 trades and you're still in the profits. So that's where the discipline of waiting for those better entries becomes your edge. That's how you make your money in trading. Anyone that's trying to sell you on the idea that what makes a professional trader different from an amateur or somebody who's able to be consistently profitable from somebody that's not, is that one of them is better at predicting what the market can do, they are full of shit. The market is random. No one ever knows what it's going to do. It is about having the discipline to enter trades in a way that give you the highest statistical probability of success with the minimum risk. If you do it like that, you only have to be right 30, 40% of the time and you'll be a profitable trader. Anyone out there can be right 30% of the time. You can be right 3 out of 10 of your trades. And you can be profitable by doing that as long as all 10 have significantly less at risk than the potential reward. And you're always using 2% to measure your account size. So after all of that spiely gone Spielberg, let's finally see what happens. We're back at the base of these single prints. We are looking for the market to bounce. It won't necessarily be exactly to a tick at 84, but pretty close. We're looking for the market to bounce here. If we get a bounce and the market comes back through the opening price, I will be bullish and assuming this thing is going higher today. If we don't, if we continue to grind and we pass through that opening price and we get more selling and more selling, we have to pull down to 59.62. Okay. And we'll look for buyers there. So moment of truth. We've been waiting for the last 20 minutes. Now the market can tell us, do we have buyers today or not? Can they hold it? So what does the big green dot tell us? Can anyone tell me? Big green dot right at the low. What does that tell us? Come on, chat. You know the answer to this. Scalping Strategy says, have a good day, everyone. Up $5. Oh, 5K. I thought you were going to stop at $5 for the day. I was like, hey, man, to each their own. Supports. That is it. Buyers, right? And more importantly, there wasn't a big red dot there. Generally, a big red dot would mean we just stopped out a bunch of buyers, and that's actually when the market will reverse higher. But the big green dot means it's just classic support, which means we're probably going to have to bounce for a little bit here and grind and give the buyers a second to hold it rather than just stopping out sellers and instantly reversing. So we're just ready for this thing to bounce a few times, to grind a little bit, and to see if these buyers can continue to hold it. So you say, Charles, it would have been more bullish to have a big red dot? That doesn't make any sense. That would have meant more sellers at the low. It's always better to take out buyers if you want a reversal than to bring in new ones. Because when bringing in new ones, you got to hold that level. You got to keep bringing them in and bringing them in and bringing them in. Okay. So liquidity is telling us they're trying to scare the price away. They don't want this to be the low. See how as price is coming up, what are they doing? They're piling on more and more liquidity in the order books. They're trying to push the market back down into that low again. The buyers defended this time, but will they defend the next one? That's what the market wants to find out. So they're giving it one more poke. It's now or never, buyers. To bounce or not to bounce. This is your moment. Ha ha ha. We got Scout, who is watching on the Discord. Appreciate you, brother. He says, am I able to get a TPO chart through TradingView? Window Trader Blue is outside of my budget at the moment. So I have looked at TradingView's TPO charts, and to me, they're shit. Normally, I'm like, just any TPO chart is fine, but I specifically played with TradingViews, and I just don't think they're very good. I don't think they provide good clarity. So I would recommend you look into Motive Wave or Sierra Chart or Quant Tower. There are other alternatives that are cheaper, but I found TradingViews to just be too just not helpful. The way it condenses the information, it doesn't really add anything. Fighter Pilot is with us. Merry Christmas, Fighter Pilot. The Devil Trading says, hi. Can someone tell me if the strategy works? Nope. No one can tell you if the strategy works. You just got to find out for yourself. You got to trade it. If you're talking about whether or not I know what I'm talking about, I would just say, keep watching these streams. Come back every Monday and watch, and you'll see. If you're willing to spend a little tiny bit of money to gain more insight, for just $10 a month, you can join the Piratetraders Brigade, and you can listen to me talk about this stuff every day. And you will find that I'm right more than I'm wrong. And if that's not true, you would cancel your membership. But I got people that have been following me for 3 years plus. And that's not because I'm wrong. Again, we're all dealing with a random market, right? So anything can happen. I'm wrong all the time. But it's about, am I right more than I'm wrong? I am. Because the system that I use to look at the market does work. And that is a system of what we call the auction process. It is basically just asking myself, at this moment right now, are there more buyers or sellers? And if there's more buyers, I assume market's going to go up. If there's more sellers, I assume it's going to go down. Okay? And if you just use that simple system, you will be right more than you'll be wrong. Now, when you're talking about entering trades, that is a whole way more complex conversation, because entering trades is not really about what the market is doing. It's about you. It's about your psychology and what works best for you. Some people are better at taking 50 scalp trades a day. Some people are better at taking one single day trade. Some people are better at entering, so for example, one of my favorite trades is a look above or look below and fail of the overnight range, right? So this right here was a look below and fail of the overnight low. Now, some people, if they wanted to trade that, would literally just put in a limit order at support, wait for the market to bounce, right? But me, I got to sit and watch. I got to see the market dip below the overnight low, see it come back up, see that new buying, and then I get in. So the first person will get better entries than me, but I will be right more than I will be wrong. They'll get stopped out a lot more often. And that's a personality thing. The market's doing the same thing no matter what, dipping below the overnight low and coming back up, right? But it's just what's the best fit for your personality for how you enter trades. What works when you do it over and over again, the best. Okay, so we can see the Bookmap just went dark right here at 10 a.m. That means that there's some piece of news that's coming out, and the regular day trading bots, which are all this blue liquidity you see in here, they turn off when those news bots come on. So we got to wait for the liquidity to come back, for the blue and yellow colors to come back before we can trust any support or resistance. That being said, I am now starting to lean more bearish on this market. We did get a bounce at the first set of single prints, but we could not even get back through the opening price. That is a sign this wasn't a big enough dip to bring in the buyers, and that further increases the odds that we need to come back down for those low 60s. Okay? So I would say right now I'm leaning slightly more bearish, but I got to wait for the liquidity to come back before I can be sure one way or to other. Unfortunately, that is it for the Bookmap stream today. Thank you so much to everybody who joined. If it's your first time seeing me, thank you. Appreciate you. And come back, next Monday and the following and the following. I'm here every Monday. I'm either live on the YouTube channel or I'm live on Bookmap's Discord. Come hang out and see what this is all about. I got a workshop I'm teaching next month where I am teaching all of this in depth. If you're interested in checking that out, head to marketsandmind.com. And if you want to hang out every day like this, join the brigade. It's only $10 a month. So why not give it a join? If you are a member of the brigade, head on over to the private stream and I will see you there in about 5 minutes. For everyone else, as I said, it now to me feels like the market needs a dip down towards 59.61, 59.62 area. There is a very good chance that there will be buyers waiting there. That was that low volume node we left behind on Friday. So if we get a bounce at 60, this thing can reverse and start heading higher for the rest of the day. If we don't get a bounce at 60, then that's very, very bearish. Okay? Because if they cannot hold support right there, which again was the point of control the day before, if they can't turn that into support, it means we do not have buyers bigger picture. It means this was a dead cat bounce and we're heading back down for the next lows. So support at 60 is bullish. Lack of support is bearish. The first move would be to 33. And if you get more selling there, the next move would be down to the low from Friday, okay, which is around 58.98. So if the bulls want to remain in control, they got to step in here. Got to get back up through that opening price, or they are fixing to get squeezed. Thank you very much, and we will see you all next time.